Financial and a rail car company. On this edition of Growth and Income Stock Picks with Todd Bunton, our Growth and Income Stock Strategist, sitting right next to me over here. Let's take the financial company first. T. Rowe Price, asset manager.
Yeah, and about $711 billion in assets under management. So they're a huge player. They're headquartered in Baltimore, Maryland, founded in 1937. Been around a while. Mm-hmm. But they're popular for their no-load mutual funds and their target date mutual funds, which people aren't familiar. Target date, so essentially...
Tells you how much money you need to the end of your life.
Not quite. Well, you'd pick a target date. So you say, I'm going to retire on this date. Right. You put the money in the fund, and it gets more conservative asset allocation as time goes on. Mm-hmm. So it does the asset allocation for you. It's kind of a, buy it once and forget it type of product, and that's been very popular for them. It's actually a main driver of solid Q1 results for them. The company saw $8.8 billion in net inflows into their funds in the first quarter. $6 billion of that was into the target date funds and trusts. So that's been a huge growth driver for them. It's a high margin product, drove a nice solid bottom line beat. And analysts revised their estimate significantly higher for the company over the next 2 years, which sent it to a Zacks rank of 2, which is a buy rating. So good earnings momentum going on here. And if you look, the company, or analysts expect solid growth from the company over the next couple of years. Based on consensus estimates, they're expecting about 17% earnings growth this year and 11% growth next year. Mm-hmm. Now, some of that's predicated on a strong stock market because the company has over 75% of its assets under management in equities. So if as the stock market rises, their assets under management rise and earnings grow. If the stock market falls, then the opposite happens. But if we at least continue to kind of plot along here in stocks or maybe march a little bit higher, and as long as people continue to invest in those target date funds and other T. Rowe Price mutual funds, this company should see solid bottom line growth. And in addition to that, they pay a dividend that yields 2.2%. And if you take a look, since the year 2000, the company has increased their dividend at a 14% compound annual growth rate, which is absolutely phenomenal. It's really about a double every 5 years. And even during the financial crisis, they didn't cut their dividend, held it steady, and even increased it, as you can see, 2009, 2010. So very shareholder-friendly company. In terms of a payout ratio, they pay about 39% of their earnings out in the form of dividends. Mm-hmm. That's not very high, so I can expect to see continued dividend increases over the next couple of years, as long as the stock market doesn't crash. But good income to go along with that solid growth, all at a pretty reasonable price. They trade about 18 times forward earnings, not a screaming value, but historically they traded about 20 times forward earnings, so it is a slight discount to that. Could be solid total return potential in this name over the next 6 to 12 months.
Don't use that C word too loosely. It please makes me nervous.
What's that?
Crash.
Oh, yeah, sorry.
Speaking of rail cars, well, let's speak of rail cars.
Yeah.
Rail car leasing company is GATX Corp that's on your radar.
Yeah, they're headquartered here in Chicago. They've been around since 1898, so huge player in that market. They're actually the largest rail car lessor in North America and the second largest tank car lessor here. They also have an international presence. They're in Europe, Germany, and Poland. And the company has delivered 3 consecutive positive earnings surprises, their latest being on April 24th. And that was driven in part by, they changed the way they calculate the useful life of their rail cars. So they basically extended it, which means they take lower depreciation expenses, and that kind of drove a beat. Not a high quality beat, but with that being said, they do have very strong underlying fundamentals. So if you look at pricing, that's increasing. Utilization rates very strong. Renewal rates on these leases are strong. So the underlying fundamentals are strong here. And if you take a look at the pricing consensus chart, you can see nice solid upward estimate revisions from analysts over the last couple of months. And yes, some of that is driven by just the accounting change, like I said, in depreciation, but still, don't let that cloud the judgment here, because they do have very solid underlying fundamentals. And based on consensus estimates, analysts expect about 23% earnings growth from this company this year and 15% growth next year. So good double-digit growth story here. Again, now they're tied a lot to the overall economy. Obviously, they ship a lot of chemicals, refined like petroleum products, plastics, food. Mm-hmm. So as the economy goes, so goes GATX. But everything's pointing to decent economic growth this year. So as long as there's not a recession on the horizon, they should see solid earnings growth. They're currently a Zacks rank of 1, which is a strong buy rating, so they've got the earnings momentum. And they pay a dividend that yields 2.1%. And they've actually paid a dividend for 95 consecutive years, so very solid on the income front here. And over the last 10 years, they've increased their dividend at about a 3% compound annual growth rate. So basically kept up with inflation. And all that at a pretty reasonable price. They trade about 15 times forward earnings. Historically, they traded at 15 times, so reasonable valuation to go along with strong growth and solid income. Could also be a good total return potential over the next 6 to 12 months, again, as long as the economy continues to improve here.
Okay. Own either one?
I do not.
All right. Check out other stock picks and stock picking strategies. Where, you ask? Well, on our website, zacks.com. If you're not there already watching this video, get on over. You can link to them right off the homepage, zacks.com. Check it out. With Todd, in the meantime, I'm Terry Ruffalo.